What I want to do now is to demonstrate the application of IAS 12 to AASB 112, and I'm going to focus in the first instance on the determination of the current tax payable and how this works. The situation I'm going to deal with here is we have a company which commences operations on the 1st of July 2016 and presents its statement of profit or loss and other comprehensive income for the period ending 30th of June 2017. This is below. The statements are prepared before considering taxation, and the following information is available. So you can see we start off with accounting gross profit. We have accounting expenses and accounting profit before tax of $435,000. You'll see that we have some expenses in there which may or may not be deductible for tax purposes or differently for tax purposes. For example, long service leave, warranty expenses, depreciation and insurance. So the other information. All administrative and salary expenses are incurred and have been paid at the end of the year, so there's obviously no difference there for accounting and tax purposes. None of the long service leave expense has been paid. It's not deductible until it is paid, so you've got an accounting expense and an accounting liability, but no tax liability and no tax expense. The warranty expense has been accrued, but only $10,000 has been paid, so that's going to be a difference. And the insurance was initially prepaid to the amount of $40,000. Actual amounts paid are allowed for deduction, so you can have a higher expense there. And amounts received from sales, including those on credit terms, are taxed at the time the sale is made. Plant is depreciated for 5 years for accounting purposes and 4 years for tax purposes. So what we need to do, and the tax rate is 30%. So what we need to do is we need to adjust accounting profit to work out taxable profit. The best way of handling this is to add back the expenses which aren't deductible for tax purposes at all. So the long service leave is an expense of $30,000, that can't be claimed. The warranty expense, well, the expense can't be claimed, only the payment, so we add back all the expense. Add back the accounting depreciation, add back the insurance expense. We then deduct what was recognised for tax in the tax return. So obviously we get no deduction for long service leave paid. We only get a deduction of $10,000 for the warranty paid. We have $150,000 worth of tax depreciation, and we can deduct the full insurance payment. So that gives us a assessable income or taxable income of $465,000. That's the sort of adjustment that you actually see done in a company tax return. So if you've seen a company tax return, that's going to seem pretty straightforward to you. We then calculate the tax payable in the current period, and that gives us at 30 cents in the dollar, that gives us $139,500. And so we'd recognise a tax expense and a tax payable of $139,500. And that's how we calculate the current tax payable and the resultant expense.